to the channel. If you're new, I want to thank you for coming. If you're returning, I want to thank you for your continued support. Before we get into today's red hot topic, I'm going to politely ask you to give the video a like, subscribe to the channel, leave me a comment below. I would love to hear from you. Please watch to the end for my final thought. Hit the bell icon so you're notified when new videos are released. It's very important to stay close to the channel in these very, very tricky times. All right, folks, welcome to the channel. It's always an honor and a privilege to be with you. I hope you're all doing great. Buckle up and strap in. I got a hard-hitting pull, no punches, no sugarcoating it, no rainbows and sunshine. I'm just going to give it to you and give it to you straight. And folks, we have a massive issue going on with this housing market. Are you seeing what's about to unfold in front of our very eyes? I know many of you are, but I know there is probably more people who don't. They just don't understand cycles, economics, trends, booms, busts, everything that's playing out right in front of our very eyes. But the challenging part about this one, friends, is this was an artificially created housing market, an artificially created economy, overstimulated, all courtesy of a health pandemic. If it had not for the health pandemic, we're not talking today. So thank you for the pandemic, I guess, for that, but I would have preferred to not seen it happen. The realities are, friends, this has all happened before. It'll happen again, and it probably won't be the last time it happens. More than likely, we can trust history to tell us a lot, but unfortunately, most people are just completely unaware of cycles and trends and booms and busts in the markets. And so the real estate market is the pinnacle of all asset classes. Everything will in fact hinge on the real estate market. It's when we lose the housing market, we will lose everything. Jobs will go away, businesses will shut down, recessions will be born. And that's pretty much the writing on the wall now. We all, like I always say, I try not to work too far backwards, get out of the problem in the solution, be forward thinking, critical thinking. But the reality is that, these things have happened before and they're going to happen again. So, my good friend Dan over at I Allegedly, love that guy, right? He's doing great stuff out there, stirring the pot, just trying to open up dialogue and conversation, because somebody who's been around for a while understands that this one can't sustain itself, and he's doing his best to ring the bell and sound the alarm. And he continues to. I just had an hour conversation with the guy. Anytime we talk, we have to be careful not to call each other, because you know how it is when you had a friend like that you're like-minded, you can go on all day. So, it's really tricky, but the reality is Dan is heat mapping and temperature checking so much. So good job, Dan. Keep up the good work. I know it's not easy, but it is very necessary in this times. The reality is, folks, like I said, this one hits a hot button with a lot of people, especially people in the real estate industry that think there's no way that home prices will ever get. I saw one guy, like I reported, some big content creator screenshotted me and basically told me I was an idiot for expecting house prices to come down 50%. Well, he obviously is some kid who never lived through the last housing recession. The reality of this one, though, friends, and I think most of you, if not, you're about to learn, is this bubble is bigger than the last bubble, and the last bubble produced 50% off homes. So anybody that thinks that this bubble can't do the same is probably sorely mistaken, and you might be in for a rude awakening. And again, I'm not cheering for a crash. I hope this thing continues. I benefit. Go buy homes. I love it. The reality is somebody who has a conscience, somebody who relies on a code of ethics, somebody who puts his customers' needs before his own. I don't want to see anybody get underneath a massive payment in the top of a bubble where one hiccup in their income or the economy throws them into a tailspin, and they're now dragging a depreciated asset along for the ride until ultimately they give it back to the bank. That's what happened in the last one, and it'll happen in the next one. So anybody that doesn't believe that there's not any chance that we could see 50% off homes again is going to probably get a pretty severe wake-up call. The reality is, friends, we've temperature checked and heat mapped so much with this economy. There is so many things, the perfect storm right now swirling that could completely take this one out. And the reality is, like I've reported before, 50% off homes. I believe that, don't be surprised, by the end of the year, we're talking about this, that we're already seeing, like I think Dan just mentioned when we were in his video, when we had a conversation. I recently was working with a client, went to market. They were all excited that they were going to get all these euphoric offers. They got asking price and they are upset. Upset they got asking price. Upset they got a full price offer. That is detached from all basic fundamentals of a healthy housing market. Like I said, I don't even like to pay asking price, much less over asking price as an investor. In the last bubble, or prior to this bubble, you were lucky if you even got around to asking price. If I brought you a full price offer, I was a hero. Now I'm a zero if I don't bring you overpriced offers. That is insane, friends. I hope you understand it. Let me just tell you, this thing is unfolding right in front of my very eyes. This is a game of musical chairs. We're starting to trend the other way. We're about to do a reverse course. The government is absolutely going to cool these markets down, whether you like it or not. And the challenge with this one is this. Insanity. What we're seeing now is a lot of people felt wealthy because of the appreciation in their stock portfolio, their real estates, their house, their primary home, their only house, and they went out and got under new debt because of the wealth effect. That's what happens when you send money to every single doorstep in America. Stupid, dumb, dumb, dumb. It wasn't even targeted stimulus. It was just blanket the whole country and stimulus, and then choke off the supply chains. Now we're in a world of hurt, and there's no way. Inflation is here to stay. Get ready, buckle up, and strap in, because I think what you're about to see, friends, is interest rates get risen. And now what we're seeing, even though there's a lack of supply, demand is wavering. So even though we have a lack of supply, what's going to happen is eventually this scale is going to tilt, and we're going to have way more supply and demand, even in a low inventory environment. Do you understand that? Are you hearing what I'm telling you? Friends, listen, like I said, my job is to help you win in real estate. Millionaires are not born buying in the height of a real estate bubble. All these investors and builders that you see out there are stuck in these markets. They've drank the Kool-Aid, and the rug is being pulled as we speak in the form of interest rate hikes. We are going to catch up supply and demand, and it's going to tilt. It always has. So anybody, I'm just doing my best to let you know there is no way this one sustains itself. It can't. It can't. The basic foundation of a healthy market is not there. It's a complete flood the market with flood the economy with free money printing, and now we've saturated so much debt's been created. We're teetering on a razor's edge. The blowback is going to be insane. And I rarely talk about, although I want to, the 100-year depression cycle. We're in it. Whew. Insanity. So like I said, friends, when coming back to 50% off homes, it's coming. It's coming, and I'm going to explain to you a little bit of just one of many scenarios that could play out. So what we've seen currently is just like in the last boom, builders with this mentality, build it and they will come. That's have you ever heard that? If you build it, they will come. People still drinking that Kool-Aid. It's a game of musical chairs. Right now, these builders, investors, you've heard about investors buying up entire neighborhoods. They're going to liquidate. Believe me, they will liquidate as soon as this thing reverses courses, which it's doing. How you ask, I'm about to tell you. When you see prices get to an all-time high and stall, well, that's the top of a real estate bubble, right? And we know this was a real estate bubble because the way it was produced, how fast it was produced, and the levels it reached. That's a bubble. Then it's now softening. Like I said, no more over asking price offers. At asking price, maybe if you're lucky. Days on market, price reductions. I'm seeing price reductions constantly. Price change, new price improvement, whatever. The punch bowl is being removed. So as all these investors, and listen, like we've talked about before, this comes down to the psychology of people, the psychology of sales. If people are no longer comfortable buying in this environment, that's going to absolutely wreck the housing market. And we're seeing that. We're seeing the layoffs. We're seeing the loan applications now disappear. We're seeing the adjustable rate, teaser rate mortgages resurface. It all happened before. As soon as we hit the top of the last bubble, ARM, adjustable rate mortgages, started to trend upwards to try to fit people into monthlies they could handle. And now what we're going to see is a bunch of people get into these ARM mortgages. It's happening right now. I'm just telling you right now, I'm seeing it start to happen. So these big developers, tracts, and investors. They're getting caught with their pants down. It's a game of musical chairs. And what's going to happen? They will liquidate assets. They will liquidate them at a loss. We're going to see a lot of these ETF and funds and crowdfunded, investment companies and groups start to liquidate at a loss. You understand what I'm saying? They will liquidate at a loss because they're not going to wait for the bottom. The reality is they needed somewhere to park their money. A diversified portfolio is always the best bet. And we've seen these high-flying ETF funds that are maybe all in growth stocks or whatever, tech stocks, heavy in real estate. You can't be heavy in any one asset class. You have to diversify. For me, personally, now I love investment property. I love real estate. 95% of all millionaires made their money in real estate, not by owning their home, by owning other people's homes. So for me, that's where I put, and I like to minimize risk by getting partners, by having an investment group. Two heads are always better than one. You can check your thinking. You can't liquidate as quick as if you have partners because everybody has to be on board. Somebody has to be bought out. Things will move slower. Real estate always moves slower. So the reality is that's what, like I said, what we're going to see is basically these huge developments. It's happened in the last bubble. It's happening again in this one. They are trying to get these homes to market, but they're stuck in construction. They're stuck in production. They're stuck. Period. By the time they get finished, and all these homes that are being built are all brand new adjustable rate mortgages. So now it's just a ticking time bomb to see when it starts to implode. Will some areas maybe perform a little better and not get hit as hard as others? Of course. But these builder investors, we're having more people pile in because of FOMO, and even in the investment climate, they're drinking the Kool-Aid. It has become a casino mentality. And guess what, friends? In the last Great Depression, the stock market crash that had a health pandemic lead up to it, and an overstimulated economy where people rushed into the investment markets and started to enjoy returns, and then it imploded because people, just like right now, because people didn't want to work, they wanted to invest. And right now, the workforce is full of people that don't want to work. And we're going to see that all get recycled. We're going to see layoffs come and a new batch of employees that are motivated to work get in there and do their job much better than the current batch of employees. We've created spoiled, stay at home, don't want to work, workforce. It's just insane. You're feeling it, right? You're feeling it. When you go out there to the restaurants, rarely do you see somebody that's actually takes the pride of ownership in their job and enjoys being there. Majority of them either have a bad attitude or a forced good attitude. Not many people are happy. Listen, friends, and final thoughts today. We're leaving a pandemic and entering a recession. There's a lot of post-pandemic stress disorders going on. And let me tell you firsthand, the real estate industry is not immune from it as well. We have a lot of people in the real estate industry that just enjoyed a euphoric market, and it's starting to waver. Just this weekend, I saw a colleague tending a real estate professional taking a job as a bartender, which is a separate video. Bars are doing pretty good right now because people are trying to numb the pain, but the writing is on the wall. That's why I've always said, don't have your eggs all in one basket. I love my life today. I enjoy it immensely. Is it all rainbows and sunshine? No. Do I have challenges? Sure. My goal is always not let my highs be too high or my lows be too low. Try to be somewhere in the middle. And at the end of the day, folks, if we're forward thinking, critical thinking, and like I said before, even with my good friend Dan over to ILEGID, stirring the pot, getting conversation going, That is all we're trying to do here, because I got to show you both sides of this coin. Can I guarantee a crash? No. Do I expect one? Absolutely. I wouldn't be here ringing the bell and sounding the alarm and letting people know this is a realistic scenario that's playing out in front of your faces, and you will see prices in certain neighborhoods, if not more than we had in the last bubble, hit 50% off their highs. Mark my words, friends. These construction developments are going to be getting caught in production and delivering homes in the worst possible time. And the only people that can get into these homes now are people taking teaser rate, adjustable rate mortgages. And it's just a matter of time. And once we see this reverse course happen, because like I said, demand is now catching up with supply, even with a limited supply environment, demand is now starting to equalize as people drop out. We're in a recession. People are recessing. Runaway inflation, food shortage problems, issues that are just swirling around ready to take this one out. And even without that alone, the interest rates alone are going to calm this market so far down, and there's going to be a lot of people that are going to be upside down in their recent purchases, and they're not going to like the way that feels. Let me just tell you from personal experience, they are not going to enjoy the way it feels to have just bought a house and see a correction at any level, even if it's worth 5% less than you paid for it. You felt rich, and now you're going to feel poor because it's costing you more to live, and you're making a payment on a house that's no longer worth what it paid. And it will come down to the psychology of people and the psychology of sales. And I'm telling you, friends, in today's digital diet, information at our fingertips, this one's going to have contagion, and it's going to spread. Stay close to the channel as we heat map and temperature check this one the best we can, so we can make educated decisions on where we want to go. If you appreciate the content, I do want to humbly ask you to give the video a like, subscribe to the channel, leave me a comment below. I would appreciate it. If you're watching from your television set today, another video is in your screen at this time, along with an easy subscribe icon for your convenience. If you're interested in buying or selling real estate here in America at any level, reach out to us. Email is in the description of this video. We'd be honored to help you achieve your goals in real estate. As always, thank you for your time. Please go make it count today. I'll see you on the next video.